All right, this is like take seven. So let's see if I can get through this. Bit of a rough week this past week, rate wise, due to the threat and the fear of tariffs. It wasn't the hard data. The hard data was a good employment report and a considerably lower than expected CPI inflation report. That was largely ignored in favor of the soft data, which is the fear about what's going to happen with these tariffs. What's that going to do to prices, inflation, and jobs? Also, we could have had Japan and China selling our mortgage bonds. They hold quite a bit. If they were selling a lot of our mortgage bonds, something like that will flood the market that causes mortgage rates to go up. So that was suspected in the past week. We actually got up into the sevens on the conforming conventional loan product on Friday, came back down today. It's Monday afternoon. I have to go outside and get some sun. Here's today's market. Now you're going to see mortgage rates about 2.5% higher than the 10-year bond, which is rolling around at about 4.4 this afternoon. Pretty hectic, frantic trading here in the bond market. For a little perspective, here is the entire past year, going back 12 months. We're here at 4.4. We've been higher this year. We were higher last year. We were also lower last year as well, and last, gosh, 2 weeks ago, looking pretty good there. But you know, this is going to happen. And for even more perspective, here we are since 1980. So these are all I could probably point out the recessions. And here's every time we have such a strong dip. That's typically where we've had a recessionary movement. Here's COVID right here, and here we are. So, you know, uh, it's not as bad as it has been in the past. Yes, we have higher prices along with elevated rates right now. People are still buying and selling houses, and here's what we're seeing today in the market. The 30-year fix came back down with no discount to about 6.875%. Hopefully that trend continues. Uh, FHA, VA, USDA are all up from about 5.99 last week to about 6.5. But like I said, they popped pretty hard on Friday, and they came down today as the worst fears about tariffs kind of are thought now to not be happening. Okay. The bottom in red here, this is a funky loan. This is a 30-year fixed. It's based upon bank statements for someone who is self employed. What that means is we don't use income tax returns. We get the most recent 12 or 24 business bank statements. We add up all the deposits, and then typically we divide that by two, cut that number in half. That tends to give us a considerably better number than the net off of tax returns. And so we do these quite a bit. These used to have considerably higher rates right now, but right now with one discount, my 30-year fixed bank statements loan is at about 6.99%, and hopefully that improves as well. So that's for people who are smart. You know, it's tax day, and people write off as much as they can. People who are self-employed pay the price when it's time to buy a house because we use the net figure after expenses, while conversely we use the gross figure on W-2 buyers. So that needs to be looked at. But it is what it is, right? Okay, let's talk about jumbo loans real quick here. Now, a low down payment jumbo loan is something that I've recently gotten in our portfolio here. A jumbo loan is a loan amount over $806,500. And that's the loan amount, not the price. You could have a $5 million house, and if the loan amount is under 806,500, it's not a jumbo loan. Uh, Typically, these require a 20% down payment. I have loan options now that are 5 to 10% down payment positions. So more people can enter that space as housing becomes more expensive. Uh, Also, remember VA loan, zero down, no mortgage insurance, up to $1.5 million. These are different loans that I have. One of them is the 5% down one that I have. It's a 5-year fixed arm with no prepayment penalty. And that rate is in the fives with about 1 to 1.5% discount fee, which can be paid by the sellers. So I am putting people into the upper 5%. That was gone Friday, came back today as the market kind of calmed down a little bit. Hopefully that continues to improve. And I don't want to bog you down with a bunch of information this week, but fingers crossed that the market improves just like the weather is. Y'all have a good day. Thank you.